Hello and good evening, everybody. Welcome to the ninth episode from our Industry Speak series. I'm Abhijit Roy, co-founder and CEO of GoldenPi, the online platform of choice of lakhs of investors for their fixed income investments. Just to give a bit of an introduction about this Industry Speak series for our first-time viewers, here we invite the trailblazers, the rising stars and the behemoths from the finance industry. We get into a deep candid discussion from the leadership team and try to understand what is it that they're building, and in a way how are they impacting the overall financial landscape in our country. Now this we do so that our viewers have requisite amount of information about the entity. In case there is an investment opportunity, you can make a well informed decision while moving. Today, ladies and gentlemen, it's truly our honor and pleasure to have one of the behemoths from the finance industry, Piramal Enterprises. I'll give a little bit of background about the global group first. The Piramal Group. It is one of the global conglomerates that we have out of India and based across 30 countries with brand presence over 100 markets. It's been in the market for over 3 decades. Now, when we speak about Piramal Group, they have their presence in financial services, real estate, pharma, to name a few. Today, we will have the discussion on Piramal Enterprises, which is one of the largest non-banking financial services entities in a country, or the NBFC, as we call them. The Piramal Enterprises has got over $10 billion in assets under management, with over 400 offices spread across states and union territories in a country, right? Truly the definition of a financial behemoth. It's my pleasure to invite to a discussion Mr. Jairam Sridharan, who is the MD and CEO of Piramal Capital and Housing Finance Limited. Mr. Jairam has over 2 decades of industry experience wherein he has set up and scaled businesses. Previously, he served as a CFO of Axis Bank and played a pivotal role in driving 6x growth in the retail lending and payments division during his 5 year tenure. Mr. Jairam holds an engineering degree from IIT Delhi and a management degree from AM Calcutta. He has also received accolades such as the best CFO from Institutional Investor magazine and has been included in the Economic Times 40 under 40 list. A truly illustrious background. We also have with us Mrs. Upma Goel. Upma Goel serves as the Chief Financial Officer of Piramal Enterprises Limited. With a chartered accountant background and over 30 years of experience in financial services sector, Mrs. Upma excels in business strategy, financial control, risk management, just to name a few. She initially joined Piramal as the CFO of the retail finance business within Piramal Capital and later ascended to the position of CFO for Piramal Enterprises. Mrs. Goel has been honored by the Financial Express in September 2022 for her outstanding contributions to the industry and the Piramal Group. It's truly our honor to have you both on our show today.
Thank you, Abhijit, for having us. We will start with our presentation. I hope folks can hear me clearly. Do let me know if there are any challenges on that. So we will discuss today 3 or 4 things. We will start with our strategies and like what at the top of the house level, what are some of the strategies that we are trying to adopt. We will talk a little bit about our financials and outcomes of those strategies. And then I'll give you a little bit of an overview of our 2 main lending businesses, the retail business and the wholesale business, and wrap up with a bit of discussion on our liability side strategies and what our borrowing book looks like. And finally, give you a quick overview of the particular issue that is open right now and what some of the details of the of that are. So that's the agenda of what we are going to discuss. Let me start with the financials and kind of our performance and numbers as it regards our strategy. Let me just restate one point that Abhijit made in his opening remarks, which is important for everybody to keep in mind. In the Piramal Group, there are multiple companies. The company you're speaking with today is Piramal Enterprises Ltd, which is the flagship company listed separately on our stock exchange. And is a financial services only entity. So this entity only does FS. and largely lending business. There are a couple of other businesses, but lending is the predominant business. 95% plus of our business is lending. And it is a RBI registered NBFC. So the corporate structure is that the listed entity is an NBFC or a non-banking finance company. And under that listed entity, there is a 100% subsidiary, which is a housing finance company. So that's the overall corporate structure. So the numbers that you will see is at the consolidated top of the house NBFC level, which is that's the entity that is looking to raise debt through this issue. So with that background, let me explain the strategy and outcomes of Piramal Enterprises. Firstly, our stated strategy for the last few years has been to transition our AUM mix from being a largely wholesale AUM to a much more retail-oriented AUM. In line with that strategy, our diversification over the last 1 year has been quite stark. We started the year with 33% of the business being retail, and we ended the year with about 50% of the business being retail. So this is a trajectory that will continue, as I will mention on the next slide, in terms of our go-to where we expect this to be about a 2/3 retail business. And right now, we have gotten to half and half retail and wholesale. To achieve this diversification of AUM, we have done two things. On the one hand, we have grown the retail AUM materially. As you can see in the second bullet point, retail AUM has grown 49% year on year, from 21,000 crores to 32,000 crores during the course of the last financial year. Simultaneously, we have also reduced the AUM of the wholesale book, the traditional or the legacy wholesale book, what we call wholesale 1.0, which is the book that we are trying to run down. We were able to reduce that by 33% during the course of the year, coming down from 43,000 crores to 29,000 crores. So that significant reduction we were able to achieve during the course of the last 1 year. While we are doing that, we have also been building the new generation of wholesale business, a much more granular wholesale book, comprising of both real estate and non-real estate corporate lending. And we were able to build this book up to about 3,000 crores worth of AUM between these two different businesses that we are generating right now. From a balance sheet perspective, we are an extremely strong balance sheet with a capital adequacy ratio of upwards of 30%. I want to remind everybody that RBI's regulatory requirement for NBFCs like ourselves is 15% on capital adequacy. So we are more than 2x of the regulatory requirement minimum. So those were the numbers and the outcomes. Now, what are the strategies that those numbers are working towards? These are the strategies that we have called out for ourselves and we have declared to the external world as what we are pursuing. Firstly, we are looking to build an AUM which is 2/3 retail and 1/3 wholesale. We want to lend in the retail business to the Bharat markets. Specifically, we want to lend to what we call the budget customers of Bharat. In other words, outskirts of tier 1 and tier 2 and tier 3 markets. And within that, customers who have smaller wallet size than average. Those are the segments that we call budget customers of Bharat. And that is our core base that we are going after in our retail lending business. In terms of how we want to pursue the retail lending opportunity, we have made a lot of investments in tech and analytics to make sure that we are able to, as a new player, make use of a lot of the new tech stack that has now become much more standard in the industry and make that the foundation on which we are able to grow our business. And that we will talk a little bit more about in the coming slides on what that exactly means and what choices we have made in our tech stack. From a wholesale lending perspective, we want to build a much more granular wholesale lending book than we have historically had, which means that we have tried to build a portfolio where the average ticket sizes are much smaller. We do a lot more deals and we are able to keep average exposure much more in control than we were doing in the first version of our wholesale foray. To do all of this lending from a liability side standpoint, we have made a few choices. As you all might recall, after the ILFS crisis in late 2019 and early 2020, NBFCs had a lot of struggle on the liability side when the wholesale debt markets pretty much froze up for NBFCs. From that experience, we have shaped our liability strategy in such a way that we are a lot more conservative in terms of our borrowing strategy. On the one hand, we want to be as close as possible matched on the assets liability side from a maturity perspective. And B, we want to make sure that the borrowings that we are doing are indeed very well diversified, both in terms of instruments and in terms of lenders or lender categories. You will see some thoughts on this on the forthcoming slides. Finally, given that we have a sufficient buffer from a capital perspective, as well as from a cash in hand, we will be seeking inorganic growth opportunities, particularly in our retail business, to make sure that we are able to make use of the entire capital that we have at our disposal. As you know, Piramal has been an M&A engine for multiple decades in the past, and has been able to create a lot of value through value accretive acquisitions. We expect Piramal Enterprises to be no different, and hence we would continue to seek opportunities for inorganic growth, just like we were able to do with Diwan Housing 2 years ago. With that, let me jump into some of the details of the two main businesses we have. First, this look at the top of the house AUM. You will see in the top left that the AUM of the company has been basically flat over the last couple of years. And this is because of the fact that our core interest over the last 2 years has been to change the mix of the book by having the mix more and more skewed towards retail rather than wholesale. And to that extent, we have been degrowing the wholesale book while we grow the retail book. And that in absolute rupee terms has largely netted off. And hence you see the top line AUM number looking broadly the same. But if you look at the top right chart, the mix having changed quite significantly, where the mix goes from 33% retail to 50% retail. So essentially you're replacing wholesale book by retail book is essentially what we have done over the last year, and largely over the first half of this financial year as well, as you will see in some of our equity side disclosures that we have made after our June quarter. Now, if you look at the retail numbers standalone, you will see that the AUM has grown by 49% from 21,000 crores to 32,000 crores. And the wholesale book, particularly the legacy wholesale book, wholesale 1.0, has reduced by a third from 43,000 crores to 29,000 crores. Of course, we have also built out a little bit of a wholesale 2 book, about 2,800 crores of new book has been built out. I'll talk more about it in the forthcoming slides. Now, let's focus on the 32,000 crores of retail book and the growth that has happened and kind of where that comes from over the next few slides. If you see our geography strategy, it'll be very clear to you that we are very much on the retail side, a branch-led business. We believe that for the customer segments that we are looking to serve, branches are a really important part of the story. We cannot serve these customers without relying significantly on branches. You see on the left, a lot of dots, the blue color dots here represent branches that we had on our books immediately after the Diwan Housing acquisition. That was about 300 branches. Since then, we opened another about 125 branches till June end 2023. Our September end numbers, etc., are not released to the public yet. But those green dots essentially are the roughly 125 additional branches that we have opened after the Diwan Housing acquisition was consummated. So you will see that not only have we reactivated all the Diwan Housing branches, we have also added new branches, a material number of new branches since then, because we believe that branch is going to be the core center of activity for our segment. Apart from these conventional branches that you see here, we have also opened 136 microfinance branches with BC partners. Those branches are co-branded between Piramal and the BC partner, and they're exclusive to Piramal. So that's the other way we actually distribute our products. Thirdly, from a small developer finance perspective, this is a new business that we have created where we pick small developers who are creating one or two sort of building projects. We fund them from the wholesale side and then convert that loan into retail housing finance loans on the other side by close coordination and collaboration between the wholesale and the retail things. So to that extent, this interesting model of working through the entire value chain is something that we are trying as well as a distribution model. Very few people can actually make this model successful. It's a tough thing to do, but we believe we are amongst the few that have that ability because of having both of those products and having teams that can closely collaborate across those two product categories. So that's our story from a distribution strategy standpoint. Now let's talk a little bit about product strategy. On the product strategy, we have 4 categories of products: housing, LAP, used cars, and unsecured loans. Those are the 4 categories in which we operate. In housing, as you will see on this chart, we are largely in the affordable housing space. As you can see, our average ticket size is 18 lakhs. And at 16,000 crores, housing forms today 55% of our AUM. This is as of March end. LAP is the second largest business we have. Again, we do small ticket LAPs. So our average ticket size is 20 lakhs. And the share in AUM is about 23%. So between housing and LAP, we are about 78%, or as of March end, we were 78% of our book in housing. Then we have the used cars business, which forms about 3% of the book, and an unsecured business, which forms the remaining 20%. This unsecured lending in itself is in 4 parts. The first part is salaried personal loans distributed from branches. The second is unsecured business loans, also distributed from the branches. The third piece is digital loans, which could be for both salaried and self-employed customers, entirely distributed digitally and underwritten digitally. And finally, we have microfinance. So those are the 4 product categories which all roll up under this bucket of unsecured. And unsecured credit forms 20% of our AUM and stands at about 6,000 crores as of March end. As you can see, the product strategy rolls up all the way from super low ticket microfinance loans all the way up to the relatively larger housing finance. Moving on, you will also see that we have been consistently rolling out new products as the quarters roll on. I'll not go into the details of each of these products, but suffice to say that we start from that customer base that I mentioned before, this budget customer of Bharat, and ask ourselves the question, what are the various products that this budget customer needs? And can we go ahead and actually offer those products ourselves? We started as a purely affordable housing company, and over time, we have built a lot of new product capabilities. And to our mind, that's a really important component of actually serving this customer. So that's as far as the product strategy is concerned. Let me talk finally in the retail business on the how of the business. So we talked about distribution strategy and we talked about product strategy. This is about technology and analytics. We are lucky in that we are a company that is trying to set up and roll out or scale a retail finance business in this era where the tech architecture is quite evolved. A lot of new tech choices are available, which 10 years ago were absolutely not available to anyone. In keeping with that, we have tried to build a fairly modern tech stack. We have tried to build an entirely cloud-based business. So we are fully cloud native, and we continue to not own any servers within the firm. It's a choice strategically that we have made in that pushes us to be cloud first or cloud native in everything we build. Secondly, we have built microservices based architecture for all our tech solutions, which essentially means that scaling them both horizontally and vertically tends to be much easier than building monolithic systems and solutions, which has been the mode of the past. Third, from a process standpoint, we work entirely in agile mode with cross-functional squads working as agile teams, which again increases the agility and speed to market for a lot of tools that we need to put in place. So those are the choices that we have made. One other thing that I should mention is that in both tech and in analytics, we have made the choice to actually have a lot of in-house talent driving this business. So whether it is programmers or whether it is big data modelers, we have all the talent sitting in-house, and we have a 300 people in-house team, a center of excellence that is set up in Bangalore, which is where our entire tech and analytics teams are housed. So those are the details about the retail strategy. Now, moving to the wholesale side of the business, let me explain to you what some of the key developments have been over the last few quarters. The first important part of our wholesale strategy was to shrink the legacy wholesale book, what we call the wholesale 1.0 book. This is the book that got originated in the most troubled times in the real estate sector and has worked through those troubled times, the GST, the RERA, the demonetization phase, and then the COVID phase, and so on. and hence those entire vintages have been troubled. So we have been very public and clear that we will be consolidating out of that part of our book, what we call wholesale one, and hence we disclose consistently what the size of that book is. As you can see, that book has been reducing quite significantly, and it has shrunk by about 33% from the beginning of the last financial year to the end. And that's the way we expect this to continue as the time goes on. Simultaneously, we have also built out this wholesale 2.0 AUM from almost nothing to about 3,000 crores during the course of the last financial year. This is what we call our wholesale 2.0 business, which comprises of two parts: the real estate business, which is the part in the dark blue, and a corporate mid-market lending business, which is the part which is shown in the Piramal orange color. As of today, these are roughly half and half. We expect this to, well, let me not make any forward-looking statements. So as of today, these are half and half. And the new real estate business that we have put together is materially different from the first phase of the real estate business, in that it is a much smaller ticket size. It is it has these components of being mid-market from a project profile perspective, rather than the high-end profile that we tended to do in the first phase of our real estate strategy. The average ticket size, as you can see, is much smaller at about 200 crores, rather than the much higher ticket sizes that we did before. And on the mid-market side, we are focusing on an even smaller ticket size, a ticket size closer to 55 crores, and very widely distributed across various sectors of the market. On both of these businesses, we follow a very rigorous screening, credit assessment, due diligence, and asset monitoring process to make sure that we are underwriting the right credit, that we are watching them closely, and that we are able to react in very, very quick time. We look at a variety of factors from a scorecard standpoint while we are underwriting. It could be linked to the management team, it could be linked to the promoter profile, to the business's financials, to any structural risks that the business might be taking up, to our own portfolio mix, etc., to decide whether an account or a potential applicant qualifies for a loan in our system. We also do, apart from the formal checks, we also do informal checks on promoter stability, promoter profile, etc. And of course, the due diligence with respect to technical, the property titles, and the approvability of the project before we go ahead and lend to those customers. So that's the summary of the wholesale business and what's been going on there over the last couple of years. Coming to the liability side of the balance sheet, I mentioned before that our intent has been to create a very balanced liability portfolio in terms of the type of instruments as well as the types of lenders. So you see a very diversified book here. 58% of our borrowings are in the form of NCDs, 27% are in the form of bonds. You will also see that a small 10% is in the form of CPs. This is in line with the other principle that I articulated to you before, that we want to be very conservative in terms of short-term versus long-term in mix of our borrowings. We want to match the maturities of our borrowing side and our lending side. And because our lending is largely longer duration, our borrowing will also largely be longer duration. And so you see that the short duration borrowing, which is CPs, is relatively small at just about 10% of our borrowing. On the right-hand side, you see the mix by type of lender. Piramal, as Abhijit mentioned at the beginning, has been in the Indian landscape for multiple decades as an institution. And in the course of that, we have had the opportunity to build some really great relationships with a lot of banks, which is why you see that the bank's share on our liability side is quite high at about 56%. Insurance companies, mutual funds, etc., form another 17% of our liability stack. One of the things that you will notice here is that retail investors do not form much of a place in our liability stack right now. This is because we have not actually come out with a lot of retail issues in the past. We did one issue, which was under the name of Piramal Capital, our 100% subsidiary, 2 years ago. and it was very well subscribed. But we have not done any issue in the Piramal Enterprises name. We have been quite happy to just borrow from banks and institutions. And that's why you don't see a lot of retail investors here, which is, of course, the reason why we are having this conversation, is that we are trying to invite retail investors as well and HNI investors to participate in this story of Piramal. And it also helps in the diversification of the lending mix of the company. Now, with that in mind, let me talk to you a little bit about the details of the tranche and what it is that we are putting out as part of this issue. Piramal Enterprises, the flagship listed company, is the issuer. The instrument is a secure, rated, listed, redeemable in face value of 1,000 rupees each. The minimum is 10,000 rupees, and after that, you can invest in multiples of 1,000 rupees each. The credit rating of the issue, it has been rated by two different rating agencies, ICRA and CARE, and both of them have rated it as a AA with a stable outlook. The NCDs are going to be listed on both BSE and NSE, with BSE being the designated stock exchange. The tranche opened yesterday, October 19th, and will remain open till this coming Thursday. However, depending on the response we get, as the issuer, we hold the right to close it early if we get the adequate level of response with a minimum of 3 days for the tranche to remain open. For the specifics on the types of series that we are offering, there are 4 series that we are offering. So there is a 2-year paper, there's a 3-year investment, there is a 5-year investment, and there is a 10-year investment. The coupon ranges all the way from 9% for the 2-year investment to 9.35% for the 10-year investment. Interest payment is annual in all of these cases, and there are various modes that are available for interest payment. There are no put and call options on this, so it's a very simple instrument, and hopefully you will be able to see a lot of interest in them. In terms of allocation, we have allocated 30% of the issue for retail, another 30% for HNIs, and 20% each for corporates and institutions. So that's the allocation that we have. So clearly, as you can see, we are interested in getting more and more interest from the retail and HNI space, and that's the way the entire issue has been designed, even in terms of simplicity of the types of instruments that we are offering. The team that is involved with the issue is the following. The lead managers, we have 4 of them: K Capital Services, Nuvama, formerly known as Edelweiss Securities, JM Financial, and Trust Investment Advisors. Those are the 4 lead managers. The registrar of the issue is Lincoln Time, and the debenture trustee is IDBI Trusteeship. So those are the details of the issue and about the company itself. I hope you found this interesting and useful. If you have any questions, we'd be happy to take them between Upma and me. Thank you for listening patiently.
Thank you, Mr. Jairam. That was an excellent layout of the company, the financials, and also of the tranche. So, let's begin with a few questions from my side. One question that keeps continuously intriguing me about NBFCs is that, and you being one of the largest NBFCs in the country, right? As of date, there are over 9,500 NBFCs registered with RBI, right? So what is it that sets apart Piramal from the rest? I mean, what is the business moat that Piramal has built? And I'm sure it has built a very strong one, you being one of the largest, right? So if you could share that with our viewers.
Yes, you're absolutely right, Abhijit, that there are a lot of NBFCs in the country. 9,500 plus are registered with RBI as of March end. The number one thing that sets aside any lending company, forget whether it's NBFC or bank or anything else, is the core moat of any lending company, which is capital. Right? You need to have capital for you to survive good times and bad times, right? On a consolidated basis, our company has capital of about 30,000 crores. Upma can share the exact numbers. And we have, Upma, I'm right? Something like
yeah, absolutely. 30,844 as of June. Yeah.
So 30,800 crores. Now that is, if you look at the NBFC sector overall, you'll find no more than 2 NBFCs who have a larger capital position than that. That is the core moat, that you have so much capital that you can actually protect yourself and your book and your investors for debt investors for a long time, because you have a lot of you have a lot of cushion available. That's number one. Number two is the ability to play at the national level. Of the 9,500 NBFCs, no more than 200 are able to play at the full national level, because they don't have the investments necessary to actually have a national footprint. And when you have only a regional footprint, that leaves you at the risk of what happens to that one regional market, right? Some credit risks might pop up in that market, or growth might go down, or anything might happen. That whole regional market might be very closely associated with one industry, and that industry could go through a downturn. Lots of things can happen to regional NBFCs, which are just much less likely in a national level NBFC. That's the third thing I'd say. The fourth thing I would say is banking relationships. Liabilities are a core mode for success in the lending business. Do you have access to liabilities, right? And having been in the industry for decades and having built some really strong relationships with banks over all these years makes somebody like Piramal quite safe from the perspective of having access to the entire banking system. Every large bank out there is going to have some exposure to Piramal, and hence we have access to some very, very large balance sheets from a borrowing perspective. That's the other important thing. The last thing that I'll say is that, particularly on the retail side of the business, being a relatively young company means that we have been able to invest a lot in technology. And the investments that we have made, like the big center of excellence, housing 300 people in Bangalore that I mentioned before, that is not something that NBFCs can easily or routinely do. It's a really hard thing for you to actually invest that much in tech and actually build technology assets. So it is something that we have been able to do, and I'm quite confident that this will provide a strong moat for us for many years to come.
Got it. I think those are very, very significant points. Number one being the capital availability that you mentioned, wherein in bad times like COVID, wherein a lot of NBFCs struggled. When you have access to capital, you are being able to still pay back, take the hit from the market, and yet being able to pay back to the lenders or the debenture holders. That builds a tremendous amount of moat for the business. My second question is, like you mentioned about access to the banks, right? Now, RBI's recent provision states that you can get into a co-lending model wherein the banks can provide 80% of the capital and the NBFC provides 20% of the capital, and they do a co-lending model. And we have examined a lot of NBFCs before who are into this model. Is Piramal also utilizing this structure, or are you completely dependent on giving out from your own balance sheet?
So I'll not make any forward-looking statement, Abhijit, on what we are going to do, but let me tell you
whatever is permissible from your end.
So think about why you do co-lending and what are the key drivers there. You tend to do co-lending if your ability to originate assets is higher than your ability to hold them on your balance sheet. You can originate 100 crores of assets in a month, but your balance sheet has room for only 25. So you will say, okay, can I do a co-lending model where I will give the 75 away to somebody and they will hold it, and I'll make some fee income on that bit, right? That's the concept of co-lending. But if you have a lot of room available on your balance sheet, if you have a large amount of capital, and actually you can hold stuff on your balance sheet, in the long run, holding things on your balance sheet makes you more money, because obviously you're putting up the capital, you're doing all the underwriting, you keep all the surplus, part of the surplus to anybody else. So you keep all the surplus. So in the long run, holding it on your balance sheet to make you more money. So far, our logic has been that we have a very large capital base. There is no need for us to actually start doing co-lending arrangements, and we are perfectly happy to originate assets and hold them on our own balance sheet. Right. So that has been the thought process behind, because of which we have chosen the strategy. You will see that a lot of the folks who do a lot of co-lending, and there are large players out there who almost exclusively do co-lending models, right? One of the larger NBFCs or HFCs actually in the country almost exclusively does co-lending, right? And if you look at the reasons why, it will be very clear that their ability to hold anything on their balance sheet is very low, because they don't have capital and they don't have lending facilities from other banks. They don't have balance sheets, so they have to do co-lending.
co-lending.
We will do co-lending if it is profitable, but we don't have to do it. We have enough room on our own balance sheet, and hence we have not done it in the past, or not.
Fair enough. Now, you have forayed into the retail lending market from the institutional lending and the MSME lending space, the lab space that you mentioned. Now, here on the retail lending side, as you rightly mentioned multiple times, that technology plays a very key role in your business. So, if a retail investor, right, wants to access loan, how does a loan trajectory look for him? Like nowadays, new age ones would give an app, you come in over there, submit documents and get it approved in a jiffy. How does it work for you, when Piramal provides it to the retail lenders, to the retail borrowers?
The journey, the customer journey depends a little bit on the type of product it is. For unsecured lending products, generally
Right.
the type of journey you described is what will happen. Right? If it's a smaller ticket unsecured lending product, it will be almost entirely digital. The customer will apply digitally, we will underwrite it digitally, we'll tell them the result digitally, and we will disburse digitally as well, and everything will happen.
And how much time does it take for that from application to disbursement?
If it's a pure digital lending business, which is a smaller ticket size business, there it will happen instantaneously, right? Within seconds, essentially. As you get larger, let's say you're taking a personal loan for 3 lakh rupees, right?
Right.
Then I have to evaluate your bank statements, etc.
Correct.
So there is a little bit of a process there. So that might happen, say, 2 days, right? If it's a business that's taking an unsecured loan, for example, a smaller ticket unsecured loan, let's say a small business that wants to take a 7 lakh rupee unsecured loan from me, that might take 4 days, right? Then if you take a used car, it might take 2 days. On the other hand, if it's a larger ticket loan, if you're taking a housing loan from us, right, and you have a property that you've identified, and we need to actually check the property as well as your income statements and do personal discussions and due diligence on you and your income earning ability, etc., because you're taking a longer term exposure on that individual. That process of sanction might take sanction itself might take 5 days, and to disbursement might take another week after that. So those are the kinds of TAT that you have by various products.
Got it. I'll take up a few of the questions from our viewers today and club them together. The question is from Mr. Krishna, and his question is, how much is the housing loans exposure in your overall portfolio? And do you also give Pradhan Mantri Housing Scheme loans as well?
So housing is about 55 or was 55% of our portfolio in the end of March. And as far as Pradhan Mantri is concerned, yes, of course, we were doing Pradhan Mantri Awas Yojana linked loans while they were still there. Now, of course, the PMAY scheme has expired. As I'm sure you've all seen in the newspapers, there is some chatter that there'll be some new version of the Pradhan Mantri Awas Yojana that might be coming up. And as and when it comes up, of course, it will be of great interest to our customer base. So we will see when that actually goes live.
There's one question from Mr. Sunil, who says, could you let us know about NPA gross and net levels?
Yeah. Upma, you want to take that, please?
Yeah. So as of June, we had 2.8 as a gross NP and 1.5 as a net NPA.
Got it. One more question. How much loan book do you have in tier 1 and tier 2 cities for home loans?
See, for home loans, let's say practically all of our portfolio is in the outskirts of tier 1 or tier 2 and tier 3 markets. We almost have no business in the core. So let us say if you're in Mumbai, in the core city of Mumbai, we will have almost no exposure. You will also not see any of our branches, etc.
Right.
Because we don't have any customers.
Right.
You will only see in the very outskirts of Mumbai city, and then you will start going down into kind of deeper territories. That's where we'll have our book. So almost all of our book is going to be like that.
Yeah, I think that's a splendid Bharat story. Basically, it's basically meant for the country in whole, rather than being concentrated across tier 1, tier 2, and metro cities, where anyways there is availability of institutions wanting to disburse capital. Right, the need lies beyond that one, wherein people need that capital for housing loans, for personal loans, and all those reasons. Wherein Piramal is solving that, the larger Bharat story. So I think that's a very powerful statement. There is one more question from here, and it is the question is, where do I get to invest in this issuance? Well, the issuance opened yesterday itself. Total size of 1,000 crores, 200 crores is the base issue, 800 crores green shoe option. As Mr. Jairam pointed out, 30%, which is overall 300 crores, is reserved for retail investors, wherein you can invest at a ticket size of 10,000 and you can start investing via UPI up to 10 lakhs. Right? That's generally what is allowed. You can go to, the issue is already live on GoldenPi platform as of yesterday. You can start applying as low as 10,000 ticket size over there. I think with that, we had splendid discussion and understood the overall structure from you very well. And it's a wonderful issuance. Piramal, like you mentioned, had come last 2 years back via to raise money via debentures. Right, it's been a time, so it's a rare occasion for investors to be able to access investment opportunity into one of the largest NBFCs in the country, which is armed to the teeth with capital, right? And has got a very long legacy of being able to serve the Bharat story. Right? So it's a wonderful opportunity. Basis the information that has been shared, take your call. And yeah, thank you, Mr. Jairam. Thank you, Mrs.
Thank
Upma,
you.
for
Thank you,
for
Abhijit,
sharing
for
your
having
insights.
us, and thanks to all the investors for listening to us patiently. And yeah, the screen here shows the attractive offer that is there, and we look forward to seeing your investments. Thank you for having us on your show, Abhijit.
Thank you. Thank you. Goodbye, everybody.
Investments in debt securities are subject to risks. Read all the offer-related documents carefully.